Welcome back. You're watching The Money Show with me, Kavita Thapalial. Now, despite heightened volatility in Indian markets, the confidence of retail investors continues to be strong. Data released by the Association of Mutual Funds for the month of March showed growing investor confidence in the markets via investments through SIPs. Now, talking about the numbers, SIP topped to rupees almost 14,000 crore for the first time ever. The SIP contribution for March came in at 14,276 as compared to 13,686 in Feb. Similarly, net inflows into open-ended equity funds jumped 31% to rupees 20,534 crore to a one-year high during March. So, let's analyze all of this. We have with us Arnav Pandya, founder Money Edu School. Arnav, good evening, and we'll be taking our viewer queries ahead. But then before that, let's just look at the AMFI numbers. And do you think the investor confidence is still intact, or there is some kind of sluggishness now that we can see in the numbers? Although the SIP numbers have been an all-time high, but then what kind of these SIP contributions are, and what does it mean?
Kavita. So I do not think that there has been any let up as far as the investor interest into investing into equities through the mutual fund route is concerned. Because if you look at numbers from all perspectives, one, the SIP book is not only steady, but it is steadily rising. So that trend continues, which means that even though you will be finding that a large number of old SIP are being stopped, an increasing number are also being started. So which is pushing up the amount which is coming into the mutual fund kitty through the SIP route. So that is one single thing. So whenever we look at this data, I think we need to look at it in the proper perspective on an overall basis, because just picking one item out of the entire set might not give the correct picture. So as far as investor interest into equity funds are concerned, the March data shows very clearly that that is robust, and also the fact that March, from the data, since the net inflows into equity funds is 20,000 crores, it looks as if very clearly that because of some element of stability, at least as far as investors thinking is concerned, they have not pulled out large amounts from equities, or rather from equity oriented mutual funds. On the other hand, if you look at the data on the debt side, there, I mean, you will find that there is a large pull out from liquid funds, which is normal, because that is because most companies and other entities pull out money to pay their final advance tax payments, which comes into on 15th of March. And at the end of March, we saw that last 7-8 day time period when there was a frenzy for investors to lock themselves into various kinds of longer term debt mutual funds, since from 1st April the new taxation norms for debt funds would kick in. So at least on an overall basis, retail investors have reimposed their faith as far as mutual funds are concerned.
A quick question, and then we'll go to our viewer who's online with us and waiting to ask his question. But then, which category within equity mutual funds have seen maximum inflow?
So if you look at, there are various categories. For example, see, after a long period of time, you also find that large cap funds are seeing a good amount of inflow. So that is nearly 1,000 crores has come into large cap. The mid cap, the small cap, the flexi cap category are the ones which are consistently seeing inflows, which remain high. So this is the positive thing, that even in this kind of volatile situation, we find that investors are sticking to their plan, which is of investing across a basket of mutual funds or equity oriented mutual funds across various market caps. And you can see virtually nearly all of these categories have seen a consistent amount of inflow coming in from investors.
All right, so that's all about the AMFI data. But then we move on, and we also have our first viewer online with us, Paresh from Bangalore. But then before I connect with him, if you're watching our show and if you want to ask us any question, you can send us your query on our WhatsApp number, which is 865-797-4571. You can also email us your query on themoneyshow@etnow.tv. So, Let's talk to Paresh. Hi, Paresh. Good evening. Thank you so much for sending us your query. How are you doing today?
I'm doing well. Good evening.
All right. So the details given by you, you are investing in a ICICI Pru's multi-asset fund of fund, or you want to
Yes,
invest in a multi-asset fund?
I want to invest in multi-asset fund, but I have a query on what would be the better option, a passive fund of fund or an actively managed multi-asset fund? Because ICICI offers both of them, so I'm getting confused on which fund to choose.
Why specific interest in this category, may I ask?
Yes. So till now, I don't have any exposure to commodities, be gold or any commodity. And given the volatility in market, I was looking for the new SIP that I'm thinking to start to have something more stable fund. I mean, better than conservative hybrid, but not pure play equity.
And it is not specifically because of the exposure in equity commodity that you're looking at a multi-asset fund.
Yes.
All right, interesting. So, Arnav, first of all, the category on its own, multi-asset, has been doing well. Earlier, we saw a lot of interest in balance advantage, but then now all of a sudden, because so much of thrust has been given on diversification, multi-asset as a category is picking up. But within that also, what kind of investors should actually be diversifying themselves in this category? Because if you already are well diversified across market caps, and yes, commodity exposure is a benefit, is an advantage over here for diversification. But even then, does one really need to have a multi-asset fund?
So first, let us just look at the difference between a normal, say something like a dynamic asset allocation fund and a multi-asset fund. So normally when you have a kind of asset allocation fund, which is a dynamic in nature, then the choice for the fund manager is usually between debt, equity, and cash being the third option. So the fund manager there moves between debt and equity depending on their market outlook as well as the parameters that they use. The moment we come to a multi-asset fund, now one thing is that in a multi-asset fund there are more than two asset classes which are to be there in the portfolio. So this becomes equity, debt, and on most occasions gold, because that is the third asset where you have an opportunity to invest. Many funds also have real estate or alternative investments where they allocate a very small amount, but that is not very significant from the statistical point of view in terms of the overall portfolio. So a multi-asset fund ultimately comes down to debt, equity, and gold. Now the question is that if you in your portfolio already have these three assets classes, maybe you have a gold fund or you have a sovereign gold bond, and you also have some debt investments, you also have equity investments, then a multi-asset fund is not required for you because you're already doing some kind of asset allocation mix. However, if you do not have this kind of mixture in your portfolio, you have only say one type of fund and you want to diversify across these multi assets through a single investment, then a multi-asset fund becomes suitable for you because there the fund manager will make the changes and do the exact allocation. But again, what will happen is that if you just want, say, an exposure to gold, a multi-asset fund will give you a very small exposure because even a multi-asset fund by itself is a small part of your portfolio. Within that, gold is a very small part. So it might not achieve your needs. Now, coming to the question which the investor has said, that there are two types of multi-asset fund. One is an active fund where the fund manager selects each security within the portfolio and the allocation to it. This is an actively managed fund, which is like a normal mutual fund, which is being managed. And as compared to this, there is also a passive fund of fund. Now, two things are to be noted here. One, it is a fund of fund, which means that this fund invests in other mutual fund schemes. It need not necessarily be from the same fund house. So if you see ICICI's fund of funds, it has schemes from various other fund houses also. Second is that this is a passive scheme, which means that these funds which are selected by this FOF are passive in nature. So there is no active element involved here. So one, the fund of fund by itself, since it invests into another fund and these are multiple funds, the expense ratio which you normally get, the benefit which you get in terms of a passive fund when it's very low, actually reduces to a certain extent. And as compared to an active fund, my choice would be that you should go in for an active multi-asset fund if you are choosing this for your portfolio, because at least you have a very clear outlook of where the investment is going, what is the kind of securities that are being held. Because going one step below, looking at the funds which are held by the fund of funds, then seeing which securities they have, what is the allocation, that becomes very difficult for an investor. So it's better to go in for an actively managed multi-asset fund if it's required for the portfolio.
Thank you so much, Paresh, for sending us your query. We move on. Naveen from Andhra Pradesh wants to ask his question. Hi, Naveen. How are you doing?
Yeah, I'm doing good. Thank you. So thank you for picking my question as well.
All right. So you have ICICI Pru Nifty 50 Index, UTI Next 50 Index, Parag Parikh Flexi Cap, PGIM Mid Cap, and Axis Small Cap, right? And you will invest
Yeah,
for
so
next
this
14.
is my portfolio.
Right.
Yeah. So I want to invest for next 14 years. So I want to just review my portfolio. So how healthy it is, or should I change something in this?
All right. Do you have a financial planner on board? Your consulting one?
Yeah, I want to, my goal is to build wealth, that's it. So after 14 years, I need at least 1 crore or 2 crore rupees.
At least
So
one
I
or
can
two.
increase my, yeah, I can increase my SIPs every year at 10 to 15, 20%.
How much are you investing in Axis Small Cap?
It's 3,000.
All right. Okay, so currently 14,000. How much can you increase your SIP amount?
I can increase by 20% every year.
20% every year. Okay. Enough 1 or 2 crores after 14 years with the current portfolio. Possible.
So let us look at it in various aspects. One is that time horizon is 14 years, which is a very long period of time. So the approach that needs to be adopted can be an equity heavy approach, and which the investor has already done. So in that sense, this is the way to go about the process. Second is that let us look at the portfolio in terms of the kind of exposure there is. So there is a Nifty 50 fund, which means that the top 50 stocks, there is a fund with the next top 50 stocks, which means that if you take these two together, it becomes like virtually the entire top 100 stocks, which comprises the entire large cap space that is there. There is a flexi cap fund where in the Parag Parikh flexi cap fund, there's a value oriented approach. It's a slightly large cap heavy portfolio. There is also an international exposure in this portfolio, though this has been reducing due to the limits which has been set by the market regulator. Plus, there is a mid cap fund, there is a small cap fund. So if you look at the overall portfolio in terms of the weightages, it is slightly large cap heavy, which is what it is supposed to be, with a flavor of mid and small caps, which is there. The third thing is that in terms of the nature of the funds, most of these are good funds. They have been well performing funds. My only concern would be with respect to the small cap fund, where if the investor wants to, he can change the Axis Small Cap Fund to something like a Nippon Small Cap Fund, and that will have a better balance within the portfolio. In terms of the amount which is already being invested and which the investor is going to increase or he can increase, the idea should be that every year there should be an increase in the amount which is invested. For the moment, stick to the 5 funds which are already there. And if you continue on this way, then I don't think there should be a problem as far as the achievement of the goal is concerned. Always try and see if you can have a higher corpus. Do not stop just because you think that you are going to achieve your target. Try and have a higher corpus because it can be used for some other goal also.
All right, Naveen, that's the answer for you. Anything else you want to ask?
No, nothing. I'm good. Thank you so much.
All the best. On that note, we'll take a quick break and post that viewer queries continue.